inflation crisis will flip the 2022 housing market. Since the beginning of the year, the economy has changed swiftly due to the following reasons. 1. The pandemic guidelines were relaxed. 2. The Federal Reserve boosted interest rates. And 3. Russia's conflict with Ukraine caused global markets to tremble. Despite the rapid rise in mortgage rates, real estate remained competitive because homeowners and potential purchasers were often less financially affected by the pandemic than renters. Although the housing market has remained robust, it is vulnerable to external economic influences, such as inflation. Inflation is defined as an increase in the cost of goods and services paid by customers. A little amount of continual inflation is considered natural, but the pace of inflation has recently risen, affecting everything from gas costs to house listing prices. Housing market statistics. The restricted quantity of available homes for sale is driving up prices quickly, which is adding to the inflationary strain on housing. The low inventory is partly due to building delays caused by the pandemic and partly because many homeowners might have relocated to place their homes on the market during lockdowns. According to RE/MAX statistics, there are between 4 million to 6 million fewer houses available than what is required to fulfill demand. While competition has eased slightly this year, it remains difficult for purchasers. According to the National Association of Realtors, houses will spend an average of 17 days on the market in March 2022. What does inflation mean for home buyers? With inflation and interest rates going up, will home price growth finally go down? While this is something that many home buyers desperately hope for, the answer isn't totally black and white. The Fed has continuously signaled the upcoming rate hikes due to inflation. And with the rise in mortgage rates, it significantly impacted the entire housing market. But before we continue, go ahead and click the like and subscribe buttons. It takes a lot to make these videos. Your small actions tell YouTube to keep promoting our videos. Now back to the video. Inflation will certainly have an impact on home buyers as well as homeowners, but the impact won't be extreme as many fear. According to Ivan Cemental, Senior Loan Officer at Movement Mortgage, just because there's inflation and interest rates are up, it does not mean that the prices of homes will go down. This means that the affordability of houses will decrease. Some buyers might buy a home at a lower price point, while others may reconsider purchasing one. Should I sell my house in 2022? If mortgage interest rates are low, it may be an excellent opportunity to sell one house and buy another. Lower interest rates mean one might pay less interest and save more money when financing one's new home. However, low rates can be a double-edged sword for homeowners. They frequently generate much demand since purchasers try to take advantage of reduced rates. There are more properties in a buyer's market than there are buyers, which means home buyers have greater negotiation power while looking for a property. However, in a seller's market, there are fewer properties for sale and more buyers seeking a property. In this case, the seller has greater negotiating power at the closing table, making a seller's market an excellent time to sell a home. When home buyers compete for fewer houses, the seller may frequently set a higher competitive asking price and make more minor concessions on contingencies and other negotiated terms when finding a buyer for the house. One significant advantage of a strong seller's market is that one's home value may have improved in line with demand. If one property is evaluated for a more excellent value than it was previously held, you may want to consider selling it to cash in on your home's equity. Depending on how much one's home value has climbed and how much equity one has accumulated in the property, one may profit by selling while it is still a seller's market.